Well, we're in an environment that is likely to be inflationary, and there
Yes.
is, the combination of the select financing through CMHC, which
MLI
gives
Select,
you,
yes.
yeah, it gives you a very high ratio with long amortization periods, really works out in an inflationary environment. So, a developer has to be pretty optimistic, or you shouldn't be in this business.
Yes.
So if you actually believe in inflation, and when you look at the debts that all sovereign nations seem to have, it's pretty clear that there has to be some kind of a default, and inflation is a form of soft default. And I
Yes.
think we're in for an inflationary environment. And there is nothing better than purpose-built apartments. And so if you can build something to today's standards that suit today's consumer, you've got a pretty clear run for 10 or 15 or 20 years with your debt that's fixed. You probably do 10-year term on that debt, fix the interest rates, ride that inflationary curve. And I think the future will be very bright for people that get into it.
So welcome, everybody. I spend a fair bit of time in the Alberta marketplace. And there's always, I don't know if I can put my finger on it, but there always just seems to be more confidence in Alberta and the province. And generally people, and I live in Ontario, generally people in Alberta and in Calgary and Edmonton seem to have more of an understanding of the economy there. They almost feel like closer to the land. It sounds a little trite to say it, but they seem closer to the land. So today, what we want to do is a deep drill on the Alberta market and the Calgary market in terms of apartment development in particular. We think that money from the rest of Canada should be looking at Alberta as an opportunity. Okay, Sarah, next slide. We run about 60 webinars and seminars per year. It's a pretty significant number. It's part of, we're brokers, we sell apartment buildings, we do feasibility studies. We find the best activity we can do for our clients is to educate them. And here's a couple of the events coming up. We're also trying this QR code here. So if you want to put your camera up to the screen, you get the details. We're running a webinar, we're running a live session in Toronto on October 2nd, specifically for shopping center operators who are pivoting to build apartments. So it's the day before the ICSC Canada conference. And we've done this this is probably the fourth time that we've done this type of event. A lot of people, if you're interested in apartments, come to it, but particularly we're talking about how shopping centers sort of liberate all that land that they have. Most shopping centers are 25% building, 75% land. On October 17th, so the first one is an actual live seminar. October 17th, we're doing a session on why Canadians want to consider going to the United States to invest. And we bring on developers from the US who are building apartments, and they're syndicating their deals, and it's a pitch meeting talking about their deal, the returns, and you get to talk to them and ask questions. On November 28th at the Toronto Real Estate Forum, which is an event of about 2,300 people. We're putting on an event with Informa as our partner on apartment development and affordable housing. And this is a national conference, typically attended by 100 to 200 people, and it's November 28th. So if you're coming to Toronto Real Estate Forum, which a lot of people will be at, this is a good add-on to attend. And then in 2024, we run our apartment developer masterclass, where we run 12 90-minute sessions on the different aspects of apartment developments. You can see some of them in the background here in the various books that we've written here on that topic. And we've got about 10 people signed up for it already. Interestingly enough, half of the people attending are the sons and daughters of developers. Okay, so they want to introduce their children to apartment development, and this would be a really good way to do it. Okay, but today we're talking about Alberta apartment development. If you do have a question, we've got a pretty packed hour here. Put them in the chat room. We'll try and curate them. And if the end, if we see a question that we're asking, then we're definitely gonna try and ask it or to the panel. We record all our sessions, and so if you're on here today, you'll get a recording of the session. If you want to watch it or pass it on to somebody else. And then we'll also be putting edited versions of some questions down on the through social media. Sarah, I think you're one slide behind the recording slide. Okay, and let's go straight to the agenda slide. Right. So okay, there we go. Okay. So this is the agenda. I'm not going to spend a lot of time on here. All of you can read. Next slide. We've got a great group of people here to participate today. We've got two, let's call them 15-minute presentations. We can ask questions, the speakers, you can ask questions to the person making the presentation. And then we're going to do with Phil, James, and Harvey, a session towards the end where we're going to ask questions about the Alberta marketplace. So there's an opportunity for you to participate. Okay, slide. Harvey, who you can see on the screen there, and I have been friends and now partners on many deals, but I met Harvey 25 years ago, and we have a really good cooperating relationship together. And so again, I can't put my finger on why Alberta. I mean, the data is going to show it to you, but there's just a general feeling out there that this is a very good marketplace to do business in, and a good place to build apartments right now. A lot of the story is about population, but it also seems like governance is really important. There's generally good government in Alberta, good transparency, and a good atmosphere to do business. So Harvey, I'm going to ask you, we sold 2 buildings last year, Harvey and I together. Just briefly talk about them, Harvey. Then we're going to introduce you a deal that we're selling right now.
Yeah, so the Victoria on 5th, this is a developer I've known for a long time. And I helped him do an assembly on the land. And then he got into construction. And then I kind of was involved with the lease up. In fact, Derek was involved with the lease up also. And then we took the building to market. We put about 30 clients through this building. And it was bought by a pension fund. And so it's a really quality building in a premium location. And so that's just an example of the type of real estate that you can
but Harvey, this building is Class A real estate, A+ real estate. Okay, what about the second one?
The second one, that's a Class B-. That's it's in a good area, but not quite as good as the Vic. But it was purchased by a local housing developer, and they actually bought it out of foreclosure. The foreclosure was due to a partnership that fell apart. So I've been keeping in touch with the buyer of this building. He's increased his rents considerably, and very, very happy that he made this purchase. It's about 1 year ago he bought this building.
Okay, great. Yep. Okay, so the next slide. So this is a property that Harvey and I are going to be bringing out to the marketplace, built by the same developer as the Vic. Harvey, just give us some highlights on this.
Yeah, I've been on a couple recent tours. There's 276 units, 1, 2, and 3 bedrooms. The building on the left is going to be starting occupancy in September. The second building will be finished near the end of the year. So this is about a 15-minute drive from downtown. This is an infill location. The neighborhood's about 60 years old. And there's very, very little product in this whole corridor. And so he's started his leasing. He's got a lot of interest, and no question that this is going to be very, very successful.
Yeah, and Harvey and I toured the building. There's a nice clubhouse in the middle that acts as the area for the rental office, where there's meeting rooms, a high quality gym and things like that. And I think, Harvey, what do you think rents are going to be here? So we haven't priced this yet because leasing is just starting, but we're in around the $250 per square foot mark, maybe as a starting point.
Yeah, he's got in the market. He's getting he's got a lot of demand. He's going to surpass he's going to pass the 250 square foot rents.
Right. So it's about 220,000 of rentable square footage. Average unit size is maybe around that 800 square foot, and there's a central clubhouse there, right? Some underground parking and then surface parking. Okay, so we're just kind of introducing this deal to you guys now. It'll be coming out to the market next month, but leasing has already started, and I would expect that given what's happening in Alberta, things are going to be good. So we've got speakers to talk about. This was the slide that sort of captured my attention about Alberta. And we're looking now on a North American basis, where we're taking money to the US. So we're looking at the 50 states and the Canadian provinces. And I just thought that, just showing purchasing power, just where Alberta is compared to Ontario, right? So Alberta's 14th. And you can find data showing different points, but I think that there's a stark difference between, what people have available in their pockets to spend. And that's part of the reason that we're doing this seminar today, okay? And so I think that overall, the other speaker to speak on this, but, Alberta, we all know this, strong immigration, right? Ontario has the largest outflow of people, and they're coming to Alberta. And then the economic conditions in Alberta seem quite strong. We're going to touch on that today. People have more money in their pocket because housing is cheaper, and maybe people in Calgary and Edmonton are going to have more money in their pocket to pay higher rents in the future as more and more A-class properties get built. But there's probably for sure a case all over Canada, everywhere, to talk about affordable housing as well. Okay, so it's just the interprovincial migration, which the other speakers will talk about. So let's go right into our presentation. Josh White from the City of Calgary, thanks very much for joining us. And we're going to run through your presentation now. Okay, Josh, take it away.
Sure. Thanks. Thanks for the intro. I'm Josh White, Director of City and Regional Planning here at the City of Calgary. Really pleased to be here. Always will take the opportunity to speak to people that are interested in investing in our city. We are a city that welcomes investment, and we want to be facilitators of success in the City of Calgary. And so I'll just run through a few slides talking about who we are, what we're up to, and the environment that exists here for investment in apartments. So just as a broad overview, I work in the Planning and Development Services Department here at the City of Calgary. And we're here to drive long-term planning, set the parameters for development processes, invest in communities to support that development, and create processes for more predictable processes for people to go through to realize development. One thing I think that's of note, that's quite interesting about Calgary, is that it is a unicity. So it represents over 85% of the region of Calgary. So if you're developing in Calgary, you're working with one municipality, as opposed to in many regions in Canada, depending on which area of the city you are dealing with different municipalities, different processes. And so I think that's one of the reasons why we're able to perform well, is when we get it right for everything. Next slide. So as I mentioned, I am the Director of City and Regional Planning within the Planning and Development Services area. I come from a development background myself, and started my career back at the City of Calgary, helping reform our planning processes for approvals. And I'll talk a little bit about the fruits of that labor in a little bit. But right now, I'm working more on the policy side of things, citywide, as well as with our regional partners to help grow our economy regionally. But we view ourselves as leading great city building, and really what that means is creating the policy and regulatory environment for the approvals system and development to exist successfully. We're going through a big renewal of our land use bylaw, our zoning bylaw, our what you might know as an official plan, we call it municipal development plan. And that's all in services of improving our policy and regulatory environment to achieve the goals that are the outcomes that we're seeking. And a lot of that is around achieving the type of development we want. What's of note as well is we're multidisciplinary. So we are now, through a corporate reorg, where all our disciplines are together in planning. So you're not dealing with multiple departments going through an approvals process. You have a single line of accountability on approvals and in development and in planning. So reducing those silos across our organization is a big part of what we've been up to. Next slide. Yeah, so I'll just cover a few things around Calgary's context, some of what our development trends have been going through. part of what we manage in my area is our strategic growth of our city and enabling supply, as well as investing in communities in order to support redevelopment. And then I'll finish by talking about our planning framework. Next. So it's been mentioned, Calgary's going through an enormous cycle of growth right now. We are a growth leader, and in 2022, we added over 42,000 people to our municipality, which historically is the highest amount of growth in absolute terms that our city has ever seen, and a growth rate of over 3%. So we've surpassed 1.4 million people in the region, where we've surpassed 1.6 million people. And then within the city of Calgary, we expect to hit over 2 million people within the next 20 years. And alongside that growth, we've maintained livability. I think this is really important, that we are a fast-growing city, but we are also highly livable, and that comes through how we city build and the types of communities that we've developed. So we're ranked #1 in North America, according to The Economist, in terms of livability. In fact, #1 across all of the Americas and 3rd globally in terms of livability. And so Calgary is a magnet for people and will continue to be a magnet for people because it matches relative affordability with that livability. And then other aspects of recognition for our city, and I think this is important to this group here. The Canadian Home Builders Association does a benchmarking every 2 years. It measures those aspects in terms of approvals and development charges, processes, planning systems that make it better or worse as a place to that or factors that will affect affordability in our planning systems. And we benchmark 3rd across Canada in aggregate. Edmonton was in aggregate first, so that's I think a good story in terms of Alberta. But I will note that Calgary on approval timelines was actually ahead of Edmonton. We always like to note that, and we're always working very, very hard. I noted that prior to this role, I worked on the approval side. We just went through the largest reform of our planning and approval system in the last 25 years to improve performance. And we have a strong culture of accountability to performance and timelines. And that's been a big change, I'd say, compared to, say, 10 years ago, where I don't think we were as good a city to do business in, but we put a lot of energy, a lot of time to make sure that we're a better city to invest in. And I think that CHBA benchmarking acknowledges that progress as a place to invest. So yeah, this slide's just about recent development trends. We are a very, very busy municipality in terms of development. As I mentioned, we absorb over 85% of housing starts within the region, and we maintain a very high market share in terms of development. And we issue a lot of development permits. We do over $5 billion of permits every year within the city of Calgary, and we expect to have a record year this year. Next slide. And apartments are a big part of that. So this is not within new communities, new greenfield communities, but within the established area. You can see the amount of activity proportionally that apartments make up in terms of new housing starts. But also within new communities as well, we have a robust apartment market. Next slide. And then in terms of strategic growth, we have I think a very sophisticated approach to growth, whereby we're very, very diligent about making sure that within our downtown and our established communities, as well as our greenfield, that we have sufficient supply of housing. And this is, I think, what's helped maintain affordability. We understand that our competitive advantage is enabling housing supply. And so we work very, very hard to invest in those communities, to open up servicing capacity, and then support redevelopment through reinvestment in those communities to ensure they're livable and attractive places. And that helps communities to not just grow in population, but to also become more livable as we continue to redevelop. Next slide. And this just looks at how we view what the value chain is in terms of our planning framework and approvals. So as I mentioned, we work very hard to understand the value chain from policy all the way to post-occupancy and make sure every step of the way that we're strong in our performance and facilitating growth and development. And so we have this sort of left hand and right hand side where we're creating an environment for development to occur, and on the right hand we're investing in those places to make sure that we're supporting that growth as well. Next. So that's
it,
what
Josh?
I have. Yep, that's all I have, and
Yeah,
happy to take any questions.
yeah, no, I'm just gonna ask one question now. That was a great
Sure.
presentation. You know, I was looking at a deal, like typically in Ontario, I'm thinking soft costs are 20 to 30% of your total budget. Fair enough. I was looking at a deal, which we're gonna recommend clients do in Santa Fe, New Mexico. The soft costs were 5% of the total development budget, right? So I'm guessing, Harvey, and you can talk a little later on, that, you know, if you have a faster process, that means better yields for everybody. Better yields for the developer, better yields for the buyer, and better rents for the residents of Alberta. So the number one frustration, Josh, that I think developers have is dealing with the municipality. Right now, it's very slow, very painful, very, very frustrating, besides all the other frustrations, you know, with the economy today. So just are you going to guarantee us that you are going to get through this thing faster in Calgary than most places?
I think our track record shows that we're faster than other places, but we don't want to
Yes.
rest on our laurels. We're, as I mentioned, we're trying to improve process, but we're also trying to improve the regulation that leads to better process, right? So
Yeah.
as we do our zoning bylaw and make sure that you're doing less discretionary review, more what we would call permitted use review. So you
Yep.
can, as long as you know hit the check marks, you're a go, as opposed to grinding through a more arduous process. So we're trying to get at the root of faster approvals. We know that time is a big dimension of development
Yep.
cost, and so as I mentioned as well, culturally, you know, people like myself who've come from development, we understand those imperatives. We work very closely with our development industry here for continuous improvement, and we work closely and collaboratively with them to improve process as well.
Yep. And you know, I've always appreciated the city of Calgary. We do these events live and webinars. We had Harvey introducing a guy named Roland Stanley many years ago. He was the planning guy there. And, you know, he came to Toronto, spoke at our conference, and several times. Now he's moved to the US since, but he's come on other events that we talked about, you know, planning for apartments. And I think a couple of years ago, we did a session on converting offices to apartment buildings. And I can't remember the name of the speaker, but he was great. City of Calgary has, you know, real leadership in that area. So good for you. Thanks for being here. Okay, our next speaker, Jeremy Reeves. Jeremy's a consultant in the Alberta marketplace on rental apartments. And Jeremy, thanks for being here. You're on.
Thank you, and good afternoon, everybody. Partner with Ignite Strategic, we're a multifaceted consultancy. One of our core businesses is really working with a variety of developers and looking at market opportunity through the lens of economics, socio-demographic trends, etc., and trying to really understand what that means for real estate. So we take a very balanced view. Today, I'm going to take a very quick look through some of the macros very, very quickly, but I want to really drill down into what's driving the new Calgary, what I call the new Calgary, which really is diversification of the employment base and it's really population. And I believe this will demonstrate that the numbers just said by Josh are quite heavily underestimated in terms of where population growth is going, principally down to what's happening with international interprovincial migration and what that means in terms of real estate demand. So very quickly, in terms of GDP, we track 8 to 12 institutional groups and blend everything out. And really, when we look at what's happening, Alberta and Calgary particularly are both leading the way in terms of GDP, both through 2023, where we saw growth of 3.3%, or projecting growth of 3.3% through the balance of the year, where Canada will be at 1.2%, so about 3 times the growth. And then a nice balanced 2.6, 2.7% over the next 6 years. So there's a very strong and predictable level of foundation through GDP. Next slide. terms of employment growth, we're looking at a very boisterous year this year, projected 3% growth, which again is leading the nation. That will sort of kick back into about 28,000 jobs, and the projection through the next 6 years will be a blended average of about 2.3%. It's fairly balanced each year, so an average of about 23,000 jobs being created. The drivers for that are job diversification. So I'll demonstrate a little bit later that we've got a very different employment landscape emerging in Calgary, which I believe is sustainable. And businesses are being attracted through a combination of low startup costs, a lower tax base, and a very deep employment pool. Next slide. This just, and I'll leave these with you, but this is just showing the flow of growth over the next 6 years, which is averaging about 23,000. Next slide. This slide really just shows the changing face of Calgary, and this is over the last 20-25 years. And so, you know, everybody thinks that Calgary is dominated by the energy sector, which it still is, but the actual percentage through GDP has dropped from 47 to 29%. It's still number one, but it's being caught up by other industries. And within that industry, both agriculture and energy, we're seeing a change in the type of business. There are today 900 companies that are practicing the world of clean tech, of which 300 are in the energy sector. So everything from carbon capture, storage, renewables, and water technology. So there is a changing face within that industry. Still very important, but not as important as it was. The growth sectors are finance, insurance, and real estate, which has grown from 14 to 20%. We're seeing a real push in the area of tech. And I would argue, and I think as we move through 23, 24, the real accelerators will be manufacturing, transportation, logistics, and distribution. So you'll see in that bottom corner, the transportation, logistics, and distribution have moved to about 5%. That will very quickly hit 10% as we get things like the Stony Trail completion in 2024, where a very big advantage in terms of that business opportunity. Next slide. So when we look at the city of Calgary's projections over the next 6 years, we had 42,000 people arrive. The population grew by 42,000 last year. It's about 40,000, 41,000 actually this year is the estimate. And drilling down into that, that is made up of a fairly stable 7,000-8,000 natural population growth. And this year, 33,000 through international and interprovincial migration, which we will show is nearly being hit through Q1 alone, which I think is really the point of this overall discussion today. Going forward, the projection through the city is that we'll see a blended 22,000 people added to the population per year, of which 7,000 would be through natural population growth and about an average of about 15,000 through migration. Looking at what's actually happening, we can see that through Q1 alone, there are 51,000 people have arrived in Alberta, trending toward 200,000 for the year, which is up from 140,000 in 2022, which was a record year. So there's a tremendous push forward in terms of overall migration. When you look at that versus population, Alberta is far and away the most boisterous in terms of overall migration. You know, you compare that with Ontario, it's number one. We've got about half the overall migration, but a third of the population. So in excellent shape there. Just moving on to the next slide, where we break down between international and we'll get into interprovincial in a while. And I would argue that international migration is going to stay. It's going to stay and it's actually going to grow. When we look at what happened in 2023, we've seen Alberta move to 30, it has 35,000, 36,000 people moving in through international channels, which is number 4, but number 1 in terms of measurement versus population. The real change and the significant thing to note is that Alberta is now attracting about 12, 13% of all international migration. And that is up from an average of 7 to 8% just 3 years ago. So there is a real movement toward Alberta and Calgary. Maybe could you just go back to that last slide, Sarah? Yeah, thank you. So when we look at that, there's a reason. What's really happening there is we're seeing just over 1 million people arrive in Canada. So it's 1.15 million, which will be a record year this year. Of that, about 45% are permanent and the balance temporary residents. The reason we believe this is sustainable, the federal policy through the federal levels policy is going to be pushing migration of permanent residents to a minimum 500,000 a year, with a goal to hit a population of 100 million before the end of the century, which gives us an average of about 800,000 people arriving per year in the country. If Calgary or if Alberta maintains its share at 12.4%, will be 100,000 a year, of which 33,000 or a third would be coming into Calgary, which we believe will be sustainable given the fact that the nature of international migrants has changed. They are arriving in Calgary very well informed, and 2 of the predominant things they're looking for are employment opportunity, for which Calgary's got a diversified base, and they're looking for affordable real estate, which Calgary has a very big advantage over other major cities at this point in time. Next slide. On an interprovincial basis, this is a little bit more tricky to project, but today, Alberta is flavor of the day, and you can see that Alberta is attracting a significant number of migrants, net migrants from the rest of Canada, with nearly 16,000 through Q1 alone. Second place would be Nova Scotia at 2,600, so 6 times as prolific as the second placed province. Projecting that going forward, that's not going to be maintained, but I think the fact that people have a choice of where they work, there's the opportunity for remote working. You're going to see Calgary and Alberta be much more stable in terms of interprovincial migration patterns. So when you look at really projecting, what is the population of, what could you see the population of Calgary being on a predictive basis? We know there's going to be about 7,000 people per year through natural population growth. That's fairly stable over the next 10 years. We can project that based on international population trends, we can expect a minimum 35,000 coming into Calgary. And I would say that even at 25% of the numbers we're seeing coming in through interprovincial, probably 5,000. So that would mean we can project about 45,000 people through population growth, average household 2.6. So that would relate to close to 20,000 homes per year. This slide just shows where people are coming from. It's gross numbers, so it's not net. It's the gross numbers, and about 70% are coming from BC and Ontario, which is being driven through affordability. Next slide. This slide is just looking at the impact of income and affordability. And it's a slide where the information is taken from the National Bank of Canada. It's their quarterly housing affordability monitor. This is of June. And what you'll see is that Calgary, along with Toronto, have the highest median household incomes in the country. So Calgary's at 90,000, Toronto 92, and Vancouver at 84. But you relay that back into median house prices of all dwellings. This will be resale. You got Calgary with an average price of $555, or an affordability index of mortgage payment versus income. About 41% of income is going towards shelter. You compare that with Toronto at 82% and Vancouver at 95%, and it's really positioning Calgary extremely well in terms of being an attractive place to live. Next slide. This is just a small demonstration of what those trends mean in terms of real estate. So we've just taken a quick look at what's happening in the urban core, new purpose-built rental market. And what I would tell you is that and we track every project every quarter, so we know exactly what is going on within the core. So about 8,000 units, new purpose-built units have been added since rental became flavor of the day. We saw the average blended net renting increase 16% in 22. It's up 8.2% through the first half of this year, so trending toward another 16%. We have less than 2 months supply in the market, and we have very little inventory being brought on. Demand has moved up to between 2,000 and 2,500 units per year, which will be maintained in the urban core. And supply right now is committed supply will deliver over the next 3 years less than 1,000 units per year. And that will be a combination of new purpose-built. It would be forward sold condos to investors and the conversion of office to residential. So there's a huge supply crunch versus demand. And in terms of trends, the way the industry is working, we're seeing the developers address affordability with sub 500 square foot units, studios, junior ones and ones, averaging rents on new builds now exceeding $4 a foot. And we're seeing within the consumer world, we're seeing a real trend towards mingling or sharing of units. And that has forced the 2 and 3 bedroom units to become the area of highest growth in terms of per square foot values of rental. So just a little bit of a snapshot.
Thank you, Jeremy. I think that was excellent. Thanks very much. And population is everything, right? You can't have growth without population growth and so on. Okay, so we're going to go now to the question and answer part of our session. We've got 3 great guests on. Phil Milroy is a developer. He does work in Alberta, British Columbia, throughout the West and in the United States, also a seasoned apartment developer. James Hobb, welcome, James. Is James here? Is James here?
Yeah, I'm here. You bet, Terry.
Oh, I'm sorry. Okay, yeah, okay, sorry. Okay, good. And so James is the president of Boardwalk, one of the largest REITs in the country with a significant Alberta presence. Harvey Russell is a commercial real estate broker, but he's also a developer. Okay, and you don't get many brokers being developers also. He understands the business from both sides. So Lisa or Sarah, let's go full screen now. We're just going to go sort of question and answers here. So, okay. So this is Phil, you've seen this, over the years. James, this is the typical real estate cycle, okay, that people talk about. I'm going to say that Ontario is here on the chart, as you can see it, right? There are problems. A lot of deals are stopping. Deals aren't penciling out. So there's maybe a little bit of denial, regret, fear. Phil, you want to take a shot at where you think Alberta is on this cycle?
Yeah, I think that Calgary is in between relief and optimism, and Edmonton is in between hope and relief, and maybe a little bit farther on than that for both of them.
Right. Phil, just a question. I always hear about a lag between Edmonton and Calgary in terms of the changing economy. Just comment on that.
Well, they're significantly different cities. Calgary is largely employment is much larger on in the white collar sector. There's some really interesting things about Calgary. In North American cities, there's a larger concentration of downtown workers in Calgary than there is in any other city. So it's a very concentrated white collar downtown. Edmonton is, the capital of the province. You've got the larger government presence. It tends to be not quite as right wing. One of the interesting things to say about Alberta, and Saskatchewan would fall into this too, if we were in America, we'd be called red states, and we're probably the only red states.
Yes.
We're the only red states in the country. So, depending on where you come from in the political spectrum, that may or may not be important. But one of the things to think about Alberta is, what makes a community is people. And so if you look at the demographics, Albertans earn more than the rest of the country. They pay less for everything. So whether it's gas for your car or food
Yep.
or whatever, things are cheaper. So we have a way better standard of living than anywhere else. And there's as demonstrated by Jeremy, there's a very large proportion of immigrants, and immigrants are probably more entrepreneurial than the average citizen. So it's a very entrepreneurial, can-do attitude in Alberta.
Right. James, what's your view from a public company perspective about what's been said in terms of, apartment growth and demand, supply, rent, and so on?
Yeah, look, I would say, from a public company standpoint, I think the market is starting to see the opportunity in what we're seeing on the ground here in Alberta. This is data from our first quarter report. For those, I have to be a little bit careful here because our second quarter report is coming out later this week. But in each of Calgary and Edmonton, we printed double-digit NOI growth last quarter. If we look at this same real estate cycle, and to Phil's point, I generally would agree with him that Calgary is in the optimism stage here. Calgary has seen several quarters of strong growth. Edmonton, it wasn't that long ago that we had 7-8% vacancy in our Edmonton market.
Yes.
Today we are sub 1% vacancy in each of those markets. And so for Edmonton, I'd say we're kind of between this relief and optimism stage. But to Jeremy and Josh's earlier discussion, I think we are in the early stages of big growth here. If we look at the migration, if we look at the migration trends, Derek, 50,000 people a quarter, that's 200,000 people a year. That's at 2.5 times household formation. We need 80,000 homes. We don't have 80,000 homes in Alberta.
Right. And that means probably, 15 or 20,000 brand new apartments as well, right? If you sort of translate that population growth, assuming about a third of the people are renters. It's a crazy story. Okay, so I live in Ontario. I do a lot of business in Ontario, more business in Alberta now as time goes on. But what I always hear about Alberta is people say, now, Derek, what about that volatility? Okay, so James, Phil, what about that volatility?
It is more volatile than the rest of the country. And that's both good and bad, depending on where you are in the cycle. And there's several reasons for it. One is that we get very, very little help from the federal government, whether it's conservative or liberal. We don't matter much when it comes to the importance of the vote. As the province grows, that will get better and better. But when the government is liberal, it's even the worst case, where because liberals get very, very few representatives from Alberta.
Yes.
They don't, if it's politically good to bash Alberta, they will. And, what's happened in the last 8 years is unbelievable. Something like 14,000 engineers were driven out of our province because of the energy business. Any portable capital left the province.
Yeah, Phil, you're going to find no friends of the federal government in any person who's a business person in Canada, right? So, I guess I get Alberta's got problems, but a lot of the people who aren't very happy with them as well. But I certainly agree with what you say. Harvey, we always talk about Alberta, and Sarah, go to the next slides because these are more for reference. I'm going to punch them into the chat room for people to download. But Harvey, I don't want to spend a lot of time talking about energy, okay? But talk about why energy is important and how people get up to speed on it. Today's seminar is not about oil and gas, but just comment on that, Harvey.
So I've always felt that understanding energy for people that live here and people that invest here is something that's important. So I saw Peter from Arc Energy do a presentation at the Real Estate Forum about 6 years ago. And there's 1,000 people there. Everybody was enamored with this guy. And so I started following Peter 6 years ago. He does about 40 podcasts a year. And I've learned a tremendous amount about oil. And then I've expanded it. I've got about 8 or 9 other analysts I follow. And I find it interesting. I feel very, very confident, and I make my own business decisions off my knowledge of oil and gas because I feel very, very strongly about it. This Daniel Jurgens, one of the best oil analysts in the world. And if you go back, Sarah, to the last slide, this Eric has the third largest oil investment fund in the world. He's stationed in Toronto. And you'll see below, there's 4 reasons why Eric is bullish on oil. You can go on Arc Energy and you can listen to the podcasts on both of these guys.
Okay, thanks, Harvey. So the only point we're making here is, look, oil and gas is important to Alberta, less important than we thought, right? Because there's a lot of other business there. But if you need to understand that, there are good resources here. Okay, so I kept hearing about volatility in Alberta, but when you look at the data, that volatility doesn't really show up when it comes to rental housing, right? So the first chart here is just, Harvey, quickly explain this chart, and you got 1 minute to do that, and then we'll go to the other ones.
So housing, and another one of my beliefs, if you want to assess what's going to happen in the future, you evaluate what's happened in the past. And so I've been in this business for 3 decades, and Calgary or Alberta has experienced very significant, strong housing markets in the past. 2000 to 2008 was a significant trend. 2010 to 2016. One statistic that I followed is housing starts per capita. In the last 20 years, Calgary is equal to Toronto and 30% ahead of Toronto as far as housing starts per capita. It's
Right.
a very
Harvey,
significant statistic.
Harvey, the data here is just showing that home prices in Calgary have not increased the way that they have in Toronto and Vancouver, right? And our overall belief here, and I think it's come up with other speakers, that people in Alberta have more money in their pocket. Fair enough, because of housing costs are lower. And therefore, as more product gets built and as more luxury product, people have money in their pocket to pay rent. Whereas in Vancouver and in Toronto, on housing prices and rent prices, they are more topped out. Okay, next slide. And Harvey, you asked me to put these in. I thought they were very interesting. So this is the rent growth of 1-bedroom apartments and 2-bedroom apartments in Calgary, right? And Sarah, just so you can see that there's not much of a difference. In fact, they're about the same. Calgary's rent growth in the last 21 years has been 43%, and Toronto's has been 42%, and that's CMHC data. So it's, sanitized average of the average, and it sort of dispels the volatility of Calgary or Alberta because the rents don't seem to be that volatile. Okay, and let's show the 2 bedrooms.
So
And you see sort of same thing here.
my view, Derek, is that the volatility of oil and volatility of rents, they don't go on parallel paths. So oil goes ups and down and the economy gets affected, but rental housing is a stable asset class. And so the volatility of rents really in Calgary for the last 22 years has not been that significant.
I think that's a really important point. Phil and James, I'd like you to comment on that also as well, because that's what I hear all the time is, yeah, I don't want to go to Alberta because of the volatility. Well, doesn't look like the volatility is there when you look at the rental numbers. James, you want to go first? You guys own apartments all over Canada. You're looking at this thing nationally.
Yeah, look, I mean, that's the difference between a regulated market and an unregulated market, right? I mean, certainly, if you look at this chart here between 2016 and 2018, rents were flat. I mean, our true rents, we were managing for occupancy, obviously, and so we were leading the market on occupancy, so our rents were slightly lower. But you're right. I mean, at the end of the day, we provide a necessity, and not only a necessity, an affordable form of that necessity. And so, certainly that volatility is not as, or that beta is not as wide as certainly other markets. However, I would say that, just to that earlier point on oil and gas, and we saw it here when you're on the ground during COVID, as an example, we saw negative oil prices and we saw growth in our rental market. And so Alberta's reliance on that traditional energy sector isn't what it used to be here today.
So that's the message, right? That Alberta is not just an oil and gas province. there's more here to it. And from a rental standpoint, I was really surprised by this data. Phil, what's your comment on this, man?
Well, I mean, I find it interesting to look at, the real estate cycle kind of peaked in Alberta in the multifamily business in about 2014, 2015, and then the Liberals came into power and drove both the capital and the people and a lot of the equipment out of the oil patch, and it went south of the border. So you see that our rents were kind of, they declined a little bit, but at the same time, our operating costs continued to escalate. So, NOIs declined significantly during that period. Very few people that operate apartments in Ontario, when I tell them that, our net operating income per unit today is only 60% of what it was 8-9 years ago, they find that hard to believe. So the rents are back to where they were before, but operating costs are much higher. But we are in that recovery phase where, the next step is NOIs are going to really increase.
Right, but Phil, I think operating costs for everybody have increased, and taxes in Alberta are generally lower. So when you look at cost per door of operating costs, fair enough, they are lower in Alberta by quite a bit. Okay.
Everything,
so new construction deals, yeah.
Everything that costs you money costs less in Alberta than anywhere else.
Right. So while I think it's fair to say that apartment owners across the country, prior to, let's say, COVID and interest rates happening, found themselves to be more equity rich, but more cash poor, because the compressing cap rates and lower interest rates, right, resulted in more value, but then operating costs were increased faster than rents. That's a fairly common problem. Okay, good. All right. Okay, no, Sarah, let's go back, and I want you to go full screen now. Okay, because I'm going to ask a question that I think is important for Alberta. Just go full screen. Thank you. Okay, so government overreach during COVID reached record levels, right? In all jurisdictions, sort of including Alberta. But in most of the country, we have rent controls. And in other provinces and I would say in Ontario, and I've been involved in the rent control industry since 1986, right? That's why I got involved in the business. So I'm particularly sensitive to it. I've seen rent controls wipe out the apartment development industry. Okay, you just don't want to build in a business where government is your partner, right? Ironically, in a perverted way, there's a plus to rent regulation, and that it keeps your supply in check. And so you don't have to be as good a landlord. You don't have to maintain your buildings as well. Your tenants and your new immigrants don't have as much of a choice as they should have, but it allows people to, quite frankly, just get lazier and manage their operating costs only. So when you can't control your rent, all you do is cut your costs, right? So I always joke and say to people, if you want to learn how to cut your costs, come to Ontario, right? Because that's the only vehicle that you have. Now, things have improved a little bit since then, but overall, Alberta has no rent control. And tell me how that affects the business. Phil, you go first, because I mean, as a developer, this is an important thing to you.
Well, I think there's more supply that comes into our market relative to demand, so that it is a more competitive market. But in a more competitive market, if you're very good at providing amenities and offering a good experience, you can do very well in the Alberta market.
Yes. James, you're operating in Quebec, Ontario, where we have British Columbia, where there's rent regulation. How does that stack up for ownership and development? Oh, more on the ownership side of things. Yeah.
Look, there's no coincidence that the most affordable market in the country is where it is highly competitive, right?
Really good point.
And so for all the proponents of more regulation, again, Alberta is the poster child for how to keep housing affordable. All that said, I think our operating model in Alberta and Saskatchewan, or our operating model in an unregulated market versus one that's regulated, is different in that you certainly are managing towards higher NOI, which means higher occupancy, which means fewer turnover, right? And so for those folks that are in Ontario, you're hoping for that turnover. You're hoping to get that new resident in so you can mark that unit to market. In Alberta, because we can do that on renewals as well, we're trying to limit turnover. Our minimum cost when we turn over a unit is $3,000 a month. $3,000 to turn that unit, which equates to $250 a month. That's a lot of rent to give up. And so there's a component of self-regulation that occurs here where we're trying to drive reduced turnover and higher tenancy in our marketplace.
Right. You know, it's interesting that this is the only business in Ontario and Quebec where you want your customer to leave, right? And so you underserve your customer, so they leave, so you can now go and renovate the apartment and raise the rent, right? And it's I don't want to get too much, but rent controls are like a drug. The more of it you have, the more you want, right? Or it's kind of like giving candy to a baby. The baby's crying, so you give more candy, but it's actually bad for the baby, right? And it's bad for the industry, and it's just a problem that we just can't seem to get past in a lot of the country. Okay, all right. Harvey, any comment on regulation? Well, one of the things I want you to talk about, Harry, is why does Calgary have so few apartments per capita? Sorry, I don't want the slide yet, but so Harvey, Calgary has Toronto has 10 apartments per 100 people, right? Montreal has 14 apartments per 100 people. Calgary has 3 or 4 apartments per 100 people. Edmonton has 6, right? Why does Calgary have so few apartments? Harvey? Is it regulation?
For 2 reasons. Albertans make more money, they pay less taxes, and there's more and more Albertans that can afford to buy a house. I know that in 2006, Alberta built 40,000 houses and Ontario built 60, and they're 3.5 times our size. So clearly more Albertans can get into home ownership. And another thing was, because of our free market, there was thousands and thousands of units converted, product that was built in the 70s and early 80s, and it was converted into condominiums in the 90s. So there's probably 18,000 units that were converted.
So they were pulled out of the marketplace.
Correct.
So therefore, the shortage of apartments was, in a sense, created by the legislative ability to do that, because you can't do that in a lot of provinces. You can't convert apartments to condominiums.
Correct.
So instead of building more, what we say is we're going to force you to stay in the business. Phil, any comments on conversion?
No, I've done a number of conversions. It's very easy to do here, and it's, you know, when the market says that owned apartments are worth more than rented apartments, owners take a certain portion and do that. Others take a longer view and say, well, it'll come back the other way, and they don't do that. But it's a free country to do what you want.
Amen to that, brother. Okay, good. So I think that the last question that I want to talk about, we've got a couple of stuff. Someone just asked a question on HST and GST, and that's a complicated issue. But Sarah, let's note down, I think we should do a webinar on the topic of sort of HST and GST, because that's complicated, it's messy, and developers need to understand it. But Phil and Harvey, you're both developers, right? And margins have been squeezed, right? Margins used to be, let's say, north of 20%. By that, I mean, an apartment building that costs $100 million to build might have been worth 120 million before, okay? It's worth less now, right? But more than most places in Canada. Talk about the philosophy of building apartment buildings in a world with lower margins. Phil, you go first. Tough question to ask.
Well, we're in an environment that is likely to be inflationary, and there is you know, the combination of the select financing through CMHC, which
MLI Select, yes.
Yeah, it gives you a very high ratio with long amortization periods, really works out in an inflationary environment. So, you know, a developer has to be pretty optimistic, or you shouldn't be in this business. So if you actually believe in inflation, and when you look at the debts that, you know, all sovereign nations seem to have, it's pretty clear that there has to be some kind of a default, and inflation is a form of soft default. And I think we're in for an inflationary environment. And there is nothing better than purpose-built apartments. And so if you can build something to today's standards that suit today's consumer, you've got a pretty clear run for 10 or 15 or 20 years with your debt that's fixed You could probably do 10-year term on that debt, fix the interest rates, ride that inflationary curve. And I think the future will be very bright for people that get into it.
Phil, I think you kind of nailed it. And basically what Phil said was, and Phil, I'm going to paraphrase here. At some point, when you have inflation, value catches up to replacement cost. Okay. And so even if right now it might look a little grim, okay, you might build a building today and not be so certain of what its value is in 1 or 2 years from now, or 3 years from now. But over the long term, value catches up to replacement cost. And replacement cost is going to get higher and higher. Have I paraphrased you correctly, Phil?
Yes.
Good. Harvey, what's happened to development yields and how are you thinking of it now, not as a real estate broker, but as a developer?
So, as you know, I'm a land broker, apartment broker, and a developer. So I can do a cost valuation on any type of multifamily in the city of Calgary. What I've been really taken back by is in the last year and a half, we have developers from all over this country. Victoria, Vancouver, Kelowna, Winnipeg, Ottawa, Toronto, they're all coming to Calgary and they show up and they're taken back by the margins are better, the planning process is better. You know, the GST is different. So all these Alberta Advantage, whatever you want to call it, there's some very excited people from other regions that are doing a direct comparison to what the market was in their market. And they just find Alberta or Calgary much better on a comparison basis.
Yes. Great. Sarah, let's just go to maybe full screen with everybody. Maybe we're on that. So, okay, so we've hit our 1 hour mark. You know, I'm guilty of saying this after every webinar, but I think this is the best webinar I've done in a long time. So thank you everyone for joining us. We'll make the recording available to you. And if the speakers agree, maybe we can come back in about 6 months again and do a little recap on what's happening in the Alberta market. Harvey and I are active in the market. We see this as a place that money wants to go. And by the way, there's a lot of money sitting on the sidelines in private hands right now, okay? And Harvey and I are placing that money in developers' hands, okay? Because money needs a place to go. The institutional guys may be quiet right now, but there's a lot of money in the private sector that would love to be in the apartment business, both owning brand new apartment buildings as well as joint venturing with developers. So thank you very much for being here. We hope you enjoyed it, Phil, Harvey, James, Jeremy. And we appreciate you guys being here. Josh, thank you for being here. And we look forward to seeing all of you again. You'll receive an email after this, inviting you to join me on LinkedIn, where I post quite regularly, but also we'll send you a recording of this and a summary. Okay. Thank you very much, guys.
Thanks, everybody.
Thank you.